Finding cheap car insurance as a young driver in the United States can feel almost impossible. If you're under 25, especially a teen or college student, insurance companies usually see you as high risk, and when insurers see risk, they raise prices. But here's what most people don't realize. Affordable car insurance does exist for young drivers. You just need to know where to look, what discounts to use, and how insurance companies actually calculate your rate. In this complete guide, we're going to break down everything young drivers need to know about getting cheap auto insurance, including average costs, best companies, discounts, legal requirements, and expert strategies that can lower your premium fast. Why car insurance is so expensive for young drivers. Insurance companies price policies based on one thing: risk probability. Statistically, younger drivers are involved in more accidents than older drivers according to U.S. traffic safety data. Drivers between ages 16 and 24 have the highest crash rates per mile driven. Because of that, insurers charge more. Here are the main reasons young drivers pay higher premiums. Limited driving experience. Higher accident rates. More frequent claims. Risk-taking behavior like speeding or distracted driving. Short or non-existent credit history. And the type of vehicle you drive. But here's something important to understand. Not all young drivers pay the same rate. Your premium depends heavily on your personal profile. Average cost of car insurance for young drivers in 2026. Let's look at realistic national averages for full coverage insurance. Age 16, about $6,500 to $8,500 per year. Age 18, about $5,000 to $6,500. Age 21, around $3,500 to $4,800. Age 24, roughly $2,700 to $3,900. Age 25, about $1,900 to $2,700. Notice the pattern. Rates drop significantly as you gain experience. Turning 25 is often when drivers see their biggest automatic price drop, assuming they've kept a clean record. Minimum liability coverage is cheaper than full coverage, but it also protects you far less. Cheapest car insurance companies for young drivers. Rates vary by state, but nationally these insurers frequently offer lower premiums for young drivers. Geico, known for low base rates and strong student discounts. State Farm, excellent option if you're added to a parent's policy. Their Steer Clear Safe Driving program can reduce costs. Progressive, good for higher-risk drivers and offers usage-based discounts through their Snapshot program. Nationwide, offers telematics savings and good student discounts. USAA, often the cheapest overall but only available to military members and their families. Important tip. Always compare quotes. Prices can vary by hundreds, sometimes thousands, between companies. Cheapest types of coverage for young drivers. Choosing the right coverage type is the fastest way to lower your premium. Liability only, cheapest option. This covers damage you cause to other people and their property. It's required by law in most states. Best for older vehicles worth less than $4,000. Full coverage. Includes liability, collision, and comprehensive. Best for newer cars, financed vehicles, or cars you rely on daily. Pay-per-mile insurance. Your premium depends on how much you drive. Perfect for students, remote workers, or anyone who drives less than average. Best discounts for young drivers. Many young drivers overpay simply because they never ask about discounts. Here are the most valuable ones. Good student discount. Save up to 25% with a GPA of 3.0 or higher. Driver training discount. Completing a defensive driving course can reduce your rate. Safe driver discount. No accidents or violations for 3 to 5 years can mean major savings. Multi-policy discount. Bundle auto with renters or homeowners insurance. Multi-car discount. Families insuring multiple vehicles save more. Telematics discount. Install a tracking app that monitors driving behavior. Safe drivers can save up to 40%. Cheapest cars to insure for young drivers. Your car choice massively affects insurance costs. Cheapest cars to insure are usually sedans, small SUVs, Older vehicles. Cars with high safety ratings. Most expensive to insure. Sports cars. Luxury vehicles. Modified cars. High horsepower models. Affordable vehicles that typically have low insurance rates include Honda Civic, Toyota Corolla, Subaru Outback, Mazda 3, Hyundai Elantra. Choosing the right car can save you more money than switching insurance companies. How young drivers can lower insurance costs fast. If you want immediate savings, these strategies work the quickest. Join a parent's policy, often 50 to 70% cheaper than buying your own. Increase your deductible, raising it from $500 to $1,000 can lower premiums 10 to 20%. Improve your credit score. Insurers in most states use credit-based insurance scores. Drive less, lower mileage equals lower risk. Compare quotes, never accept the first offer. Minimum car insurance requirements by state. Each state sets its own minimum coverage levels. For example, California requires 15/30/5. Texas requires 30/60/25. Florida requires 10/20/10. New York requires 25/50/10. These numbers represent bodily injury per person, bodily injury per accident, property damage. Experts strongly recommend carrying more than the minimum. Minimum limits often don't cover serious accidents. Should young drivers choose minimum coverage? Minimum coverage may seem attractive because it's cheap, but it's risky. Pros: lowest monthly cost. Meets legal requirements. Cons: no protection for your own car. Limited liability protection. Higher financial risk after accidents. Full coverage is usually recommended if your car is worth more than $4,000. You have a loan or lease. You depend on your vehicle daily. Best insurance strategy by age group. Teen drivers ages 16 to 19. Stay on parents' policy. Choose safe cars and complete driver safety courses. College students ages 18 to 22. Ask about student discounts. Reduce mileage if living on campus and consider usage-based insurance. Young adults ages 23 to 25. Shop independent policies. Build credit and remove unnecessary coverage. Pay-per-mile insurance, the hidden money saver. Usage-based insurance can drastically cut costs if you drive less than 8,000 miles per year. Best for students, remote workers, city residents, part-time drivers. These programs track your driving through an app or plug-in device and reward safe behavior with lower premiums. Common mistakes young drivers make. Avoiding these mistakes can save hundreds each year. Choosing minimum coverage without understanding the risk. Not comparing quotes. Buying a sports car first. Letting coverage lapse. Ignoring discounts. Adding unnecessary coverage. How credit score affects insurance. In most states, insurers use credit-based insurance scores. Drivers with higher credit scores statistically file fewer claims. Average premiums by credit tier. Excellent, about $1,900. Good, around $2,300. Fair, about $3,000. Poor, roughly $4,200. Building credit can lower your rate significantly over time. When young drivers should switch insurance companies. Consider switching if your premium increases without explanation. You turn 25. You move to another state. Your credit improves. You buy a different car. Switching every 1 to 2 years can often save money. Best coverage add-ons for young drivers. Some add-ons are worth it, others aren't. Recommended. Roadside assistance. Rental reimbursement. Uninsured motorist coverage. Medical payments coverage. Usually unnecessary. Custom equipment coverage. Luxury add-ons. Gap insurance, unless your car is financed. Cheapest and most expensive states for young driver insurance. Cheapest states tend to include Maine, Vermont, Ohio, Idaho, Wisconsin. Most expensive states: Florida, Michigan, Louisiana, Nevada, California. Urban areas almost always cost more than rural ones because of traffic density and theft risk. How driving record affects your cost. Your driving history is one of the biggest pricing factors. Clean record, lowest rates. Speeding ticket, 15 to 25% increase. Accident, 40 to 70% increase. DUI, 80 to 200% increase. Maintaining a clean record is the single best long-term strategy for cheap insurance. Paying monthly versus annually. Paying annually is usually cheaper because insurers add installment fees to monthly payments. Typical savings 5 to 10%. If you can't pay yearly, quarterly payments are often cheaper than monthly. Cheapest insurance for high-risk young drivers. If you have violations or accidents, these companies often offer better pricing. Progressive, Dairyland, The General, Bristol West. Acceptance insurance. High-risk drivers can still reduce premiums by taking defensive driving courses, maintaining continuous coverage, waiting for violations to fall off their record. Long-term strategy for cheap insurance. Here's the proven roadmap. Start on your parents' policy. Build credit. Drive safely for 3 years. Choose safe vehicles. Compare quotes every year. Gradually increase deductibles. Turn 25. Rates naturally drop as you gain experience and prove you're a responsible driver. Final thoughts. Cheap car insurance for young drivers isn't impossible, it just requires strategy. Most people overpay because they choose the wrong car, skip comparison shopping, or miss available discounts. If you maintain a clean driving record, build your credit, and use discounts wisely, your premiums will drop every year, and by age 25 most drivers finally unlock their lowest rates. Disclaimer: this video is for informational purposes only and does not constitute financial or insurance advice. Insurance rates, coverage availability, and laws vary by state and provider. Always compare personalized quotes from licensed insurers before making decisions.